All right, hey guys, Sam back with you. Monday, January 22nd. We're mid-morning-ish. Had a member interested in an update on BitShares. Now, this is a strong project, been around for quite a bit of time. And so I've got it here. This is the 4-hour chart. I've got my current count over here, and we're going to get to that in a second. But I had someone ask me today about where we are in the market cycle for the whole crypto sphere, if you will. And I sent him a chart. I just wanted to share this. I kind of make assumptions that most people have seen this, but if you haven't seen this, this is considered the Wall Street cheat sheet, and you can get it at cheatsheet.com. Take a look at this. It's very common. This is the psychology of market cycles here, and you can see pretty much every alt with history more than a year or two. It has this exact same chart pattern. I mean, it looks exactly the same, and it's worth looking through this and maybe consider, if you've been trading in here for the last year or longer, how this relates to your own emotional experience as the market went through this initial pump cycle and then this long sell. I mean, you see, it's almost identical, really. It's really kind of funny. So here's the pivot low here, which would be this pivot low here. So if I line those up like that, you can see, right where we are here. It's actually amazingly consistent with how that is. So here we've got the right shoulder, whether it's here, and then the long fade off, anger into despair, into depression, and now we're in what's considered the disbelief. Is this real or is this a sucker's rally? So something to maybe just give a look to, and as a reference. It's actually very interesting and worth the time to have a look through it. So pulling that aside, okay. So where are we? So is this real? Is this disbelief? Are we in something new here? Well, you let the chart tell you. Everything you need to know is right there. We can certainly look here and see, if I open this up, we can see we've completed a 5-wave structure here. Right? It's not hard to spot this. Here's our 1, we got a 2, we got a 3, we got a 4. Okay, so we've got a completed 5-wave. So I'm on the 4-hour here. Let me open this up a little bit more. So, again, as I will often tell you, a few things you want to do. So we know this is a strong project. So if we come over here, I've got this up on Polo. So here's BitShares, and here's the CoinGecko scale, 62%, 831 million for the market cap. Very strong development interest, and the community is very active there. Bulk of it is all traded against Bitcoin. And we can see Binance and Polo are where the majority of it trades. I just happen to have it up here on Polo. But Binance would be virtually identical, or very, very close, I should say. Maybe not identical. But we can look here and say, okay, well, I've got everything I'd like to see here. I've got good subdivision here into my 1. I've got an A, then I got a B, I got a C into my 2. That all looks good. And then I've got subdivision here. I can just, looking at this, we can see, okay, well, all the Elliott structure we would like to see is there. We get a shallow 2, but it's there. Then we get a 3 and a 4 and a 5, and so if I raise the degree here, so I've got my degrees wrong here, so let me reverse those. So we'll go up to minuet for the larger degree, and we'll come back down here. We'll go to subminuet, so it makes sense. Waves within waves. Okay, so we can see that here. So 1, 2, 3, 4, and then we finish for the 5. Now here's the 1 that's relevant. So this 1 was relevant to this 4, so we don't overlap. So that's a good impulsive wave. Then just doing the kind of work that you would typically do. You're just checking to see, is it trading technically, right? That's really the only point after here, and to kind of confirm these pivots, so that it would help us. So here's the 38. That's what you would expect. This is the most common zone for a 4th, between the 38 and the 50. Highest probability zone. We rip up. Here's the algo target. So this is another conversation I was having with a member. Now, so the swing low to swing high here, right? So the algos, so this is likely this is front run here. So there's their target, and they get to and through it. But in addition to that, we have multiple things that we can check. So remember, as I've often mentioned, what we're doing is we're we're weaving the Elliott wave around what the large algorithms are doing, and what they're going to do is their intention is to be buyers at the 50, and they reverse, not short, but they look for the next swing to set up for a 50 on the other side of the 65 if it breaks that. So as Elliott traders, we're trying to weave around here and say, okay, well, we know that that's a potential for a fourth wave here in this zone. If we start to see this move away from it, we can trade on that on the anticipation that we're going up for a fifth, and that if this is algos in here supporting this, then they're just front running on that, or they're working off of another pivot. So maybe they're working off of this one, so it's a process of checking the pivots. So maybe they're working off of this, or maybe they're doing an extension where they're working from high to high. It's a constant process of looking to see if you can find the clues as to what is lining up technically that they're responding to. Maybe it's the wave one, maybe it's this two here. What are they working from? What seems to make sense? Well, we try and organize the information from an Elliott perspective, because that gives us a structure that we can rely on, that will give us potential roadmaps, and then we try and weave in and around that what's happening with the algorithms, and use the precision that Elliott Wave offers us to see if we can find low risk, high reward entries for this kind of a trade. So we can look here. So from an Elliott perspective, so we're going to pull from the 2 to the 3. That's where we'd like to see it. So we're now doing our own analysis relative to that wave structure in conjunction with what's happening with the algo pulls, right? With the 50 and the 618, which is what they're using. So if we now look at that and say, okay, well, again, maybe they used high to high, maybe they used the wave 2, but they did something here. Here's the pivot. They react. It goes up. They take profit. Now we've rolled over. So we can look at that and say, okay, well, there's a couple of things we can check, but we can look now and say, well, the assumption is if that's a completed wave 1, well, what are we looking for? Well, we're looking now for a wave 2. Okay, so all we're going to do, I've just wicked off the absolute low here, so we're going to pull from the low here to the high, knowing that likely, most likely zone for a wave 2 is between the 50 and the 786, right? So they tend to go deeper than a wave 4. We know this, so even though we get through the 61865, we love it there, but even though we get through, it does not invalidate this Elliott count. So from that perspective, this shouldn't be alarming. Now, here's what I'm talking about. So if algorithms were buyers here at the 50, and then we get on the other 65, that doesn't mean that they reverse and short it here. What that means is that now there's going to be a group of traders and some algorithms that will be looking for this. Okay, it's now if they were buyers here, right, and it breaks the 65, it's not that they start selling here looking for this to go down. That's not what I'm saying. What they do is they'll wait now for the next 50 going up, and they'll look to sell it here. All right, so if we get to the 50, so let me put that on there so you can see it. So if we work from swing high to swing low, and we go to the 50 here. Okay, so there'll be a group of traders and algorithms written to sell that with this as the target, and they don't care anything about an Elliott wave count. That's going to be their target. Now it's the same thing. If remember, algorithms, they make money long term, not every trade. If we break this, that does not mean that they turn to buyers there. What that means is that they'll take that loss there. They'll just close that position. Then they'll wait for the next 50 coming back the other way. Right, just see. Let me take this off so it doesn't confuse you. So now now they're just waiting to get long at the next 50. Right. So if that was the pivot where they reversed, then they just buyers here. Eventually they get on the right side of it, and they trade so much size. Then they'll trade that. They might have algorithms written to take a partial there, more here. Right. So that's relative to how the code has been written, but they will definitely take profit here. Okay, so do you see what I'm saying? So it's not that they reverse and go the other direction. They just keep waiting for the next 50. 50 after 50 after 50, and they wait, they reverse, close, take the loss. Algos take losses just like we do. They'll just wait, but eventually they'll get on the right side of it. Eventually. And then they'll catch something like that. All right. So for us, we don't have that luxury. We don't have those kind of, well, the majority of us aren't going to have the resources to just continue to do that. So we try and weave around it, and we use the Elliott Wave to see if we can get in behind them. So here we look at that and go, okay, does that make sense from an Elliott perspective? Well, yeah. So I mean, it's deep. Sure, we'd love to be buyers at the 61865 because that offers us the lowest amount of risk relative to the potential reward. That's why that's why we love that. That's the trade that we look for, right? Can we get it at the 50? If we can get it at the 618, even better because the target doesn't change. So here. Here's the algo target here. Now, eventually, we're going to find a pivot that works, and we're going to say, okay, well, now we look at this, go, okay, if that's my 2, that does make sense from an Elliott perspective. Well, what do I have here? Let's go down to the 1 hour and look and open this up. Okay, can we find a 50 in here? Or a 618. Well, if that is a too low, we've got some choppiness here, but it looks like we might have a diagonal here to start this. So let's pull this off and look potentially. Could we have the start of a 1 wave, of a 1, 2, 3, 4, 5, looking for the wave 1 of the next degree. So if I pull back out, get this set up. Okay, so you see it? So now if we have a 2 in, if we operate on the assumption that a 2 is in, well, where's the 3 is way higher. So we would be projecting for that third using 2 things. So we've got algo targets, and then we have the wave relationships. So we know the highest probability zone for a wave 3, if we're going to see an Elliott count unfold, is from the length of the wave 1 projected from right now. We don't know that's the 2, but it certainly plays as a potential 2. So we've got these targets up above. So we've got this big fat juicy wave 3 target up here, way up here. All right, so if I open this up, so you look at that and say, well, okay, can I get into the wave 1 of that? Because that's going to subdivide as well. If it's going there, we don't know that it is, but if it's going there, we're just trying to get on board. So potentially what you're trying to do is get into the wave 2 here of the wave 1 of the wave 3. So let me take that degree up so I don't make this insanely confusing. Okay, so here we go. Let's go up. Remember, it's waves within waves. So this little wave count here, let me lower this degree so that makes a little more sense. So we'll go minuet, and we'll go. Right? So do you see, all I'm trying to do is say, could we find a low-risk way, with knowing that this is our potential target up here? Can we find a way to get in here? Just so you see why you want to try and do that. If we got in right there, what is our target up here? Okay, what kind of risk reward have I got there? Well, if I'm going to go use that swing low as my stop, so if that is invalidated, then I know that my count is wrong. What I'm hypothesizing here is that I've got a wave 2 in, and I'm trying to get in now to the 1 wave of the third wave. Well, there's 13 to 1 if we're going to get this. If we are. We don't know that we are. But it's going to get there. Right? You see, this is the waves within waves within waves within waves idea. So if I take that, let's go to white or blue here, and let's raise the degree. So do you see what I'm trying to propose to you here? That can we get in here as the wave 2 of the wave 1 and maybe catch a ride all the way up to this wave 3 target? Can we? All right, well, you can't do it without taking some risk. There's the risk right there. Right? If this pivot is, if we invalidate this count and this pivot is broken, then we're wrong, right? So I mean, get used to being wrong all the time. Right? It's the majority, not the minority. You're going to be wrong more than you're right. Accept it. Don't fight it. Know that that's the reality of trading, and you just embrace it. If you get stopped out, it's just more information. It's just part of the business of trading. Stops are just reality. So you can see what we're trying to do is see if we can get into this 1 wave, because we have the potential. Now, I'm not saying you would just buy it in here. Well, you could just be a buyer here and wait and just say, oh, yeah, I'll check it later, see if we get up there. As long as you don't get stopped out here, you got a long-term trade. You can just sit and hold it. I mean, that's certainly technically valid, and that people have done extremely well in 2017 just doing that. Here at least use a little technical analysis so that you've got a reasonable entry here with a place where you know where you're wrong. But look at that upside. Now we put that in the context of this one wave. Well, remember along the wave. So let me put the wave structure on that. We're going to have retracements. We're going to have, so you might say, okay, well, if I get this action here, if I get a 5-wave structure up into a 1, well, I know that 2 can go anywhere from the 50 to the 786, just like this 2 did. Do I want to give all that back? Well, trader's choice. You're anticipating the retracement. So it means if you bought it here and we get this, and we don't know that we will, but if we got that, do you want to take profit there? Or do you want maybe you take a partial there? Take a partial out of the market, bank some profit. You're anticipating the second wave, right? If it's going to do this, that's the likely path. If it's going up to this 1618, so are you willing to, if it gets there and then we start to roll over into a 2 wave, are you willing to give back at least 50% of your profit? Because that's the calculation you're making, knowing that a wave 2 is most likely going to be at least to the 50. So if you bought it here, we go up to the wave 1, and again, it's just hypothetical. Are you willing to give back 50% of your gains for the potential to get up there? Well, that's kind of trader's choice. Or do you maybe you take a partial here, so you bank some profit along the way. If this comes down, keeps going, something changes, Bitcoin collapses, whatever. Well, now you're going to get stopped out, but likely then, if you bought it here, took a partial here, and then ended up getting stopped out here, you're going to be either at scratch or slightly ahead. So great, no damage done. Next trade, right? So a little opportunity cost. So that's when you got to be careful of shoulda, woulda, coulda. Oh man, I could have taken the profit up there. I would have if you had the benefit of 20/20 hindsight, right? We all woulda. That's the decision you got to make for yourself as to whether or not you want to continue to hold. Maybe you love this project and you're a big believer, so you might say, well, I don't care about the 50% because I know we're going up here eventually. Me, I would take a partial, and then here's what I would do. I would look to re-enter here on the anticipation that this roadmap, no reason to anticipate it wouldn't continue until it doesn't. You trade it until it fails. So if I can take a partial here and then look to reload here with some money already banked, then I'm looking for the third of the third. That's your money maker. If you can get in there. All right, so buying it here, not a bad thought at all. Knowing what you're anticipating, right? So if you were to catch this and then, so hypothetically, took a partial here, come back down, you add again on the wave 2 on the assumption you're going here. Well, now you've got some fat profit up here if you're in the third of the third. You know the fourth is going to come. Are you willing to give back 30 to 50% of that profit in the fourth, or do you take a partial here? Well, how would you know when you got to the third? Well, there's lots of ways we could do that, but we do the exact same thing here. We would, if hypothetically, if that was the 1 and that's the 2, well, we know that the high probability zone, just like this on the larger degree, that 1618, we got this right here. So putting it in scale now, are we going to get there like that? Because the third could go that high. There's the 2618. There's the 200. We don't know, but that's reasonable. That means you're going to have a big fifth. All right, that's how it's got to get there. Right? This is just a target. That doesn't mean it must stop there. It just means that's a likely spot to run into some resistance. How about this? The other thing, again, sort of back to what I was saying before, we're combining what are the algos going to be doing? If we come here and if we were to get here, again, hypothetical, and we go to the 50, well, there's their first target. There's going to be some profit taking there. There's the second, third. Are they going to get all the way to the negative 618? We've seen it happen many times. Here's a little confluence zone up here. Here's the negative 1618 and the 200. Maybe that's the third. Maybe in order to get to this 1618 up here, which is the ultimate long-term target, and nothing says it has to stop there either. But if that's our target from this trade right here, where we're just trying to get a foot into the trade and get it off and running, knowing that our stop is down here, well, you're going to take some profit here. Are you willing to give back 38 to 50% of that profit, knowing that 4 is inevitable? Trader's choice. Right? Maybe it takes that route. We don't know. These are all just potential roadmaps. So the decisions you make along the way about where you want to bank profit, move stops, trail a stop, add to positions. If you're adding here, you're adding with nice profit. All right, we love that. Trading with house money. That's how you have to think of it. So that takes us all the way back to what's going on right here. Why do I even care about BitShares right here? Well, I showed you why. So is this the 2? Is that 2 in? Well, what are we going to do? We're just going to measure it, right? So we're just going to take the low here to this high and say, well, look at that. Oh, interesting. Right into the golden pocket. So yeah, now that gets my attention. I've got a little ABC here. You know, I don't know that that's the low, but it's certainly that's a risk that you can calculate the risk there and say, well, that doesn't seem unreasonable. So if I pull that off, remember we got all of these targets up here. That, look at that, it's technical as hell. Algo tracks. So maybe that's a 1-2, or again, we don't know. You can't say, oh man, well I'm loading the boat now, because this could easily just be this. I can get this hot. We might have just an A, B. Maybe we're going down for the 786, right? You don't know. It's just these are all just probabilities, but that's certainly reasonable. So if you're buying it there with your stop doesn't have to be all the way to the pivot. You could buy it, put your stop here under the 786 on the assumption that the 1 is in, and we're putting in the 2. Maybe we get the infamous shallow C, the crypto correction I've taken to calling it, right? Where we get the shallow, or we get a double bottom at the 618. Algos defend it, and then it just takes off from there. We don't know. These are all potential roadmaps. We're just trying to get into the 2 so we can ride the third of the first. And I want to do it with as little risk as I possibly can. How can I get into that knowing that huge upside target I've got and get in here and not take huge amounts of risk? I want to do it with as little risk as I possibly can. All right? Maybe we've already got it. I mean, this is technical. It's enough to trade off of it right there because you got an ABC. All right, guys, I'll wrap it there.